This is Andrew Stotz of Stotz Investment Research, and today I'm looking at Taiwan, and what you're going to see is what I call my country profile. Now, Taiwan, according to what I can see, looks attractive in valuation but has poor momentum. So let's take a look at Taiwan. There's four parts to the way I look at any country, and the first part is the upper left-hand corner, which I call four pillars of GDP growth. So let's take a look at this in more detail. If you look at the bottom of this chart, there's a blue bar that says 2.18. That was GDP growth over the last 4 quarters in Taiwan. So I'm doing a rolling GDP growth. And you can see at the top, private consumption was 12.4%. And that was the growth year on year. And if we look at it, 56% of GDP was private consumption. So if we multiply 12.4 times 56% of GDP, we can see that 2.18 of GDP was driven by 6.88 of private consumption. In fact, what we can see is that overall growth was slow. The drivers were really only private consumption that contributed. In fact, net investment was pretty crushingly low. The laggard has been investment, which has been a big drag. Now, let's take a look at the country overall and get an update of what's happening in the market. The first thing, of course, is Taiwan's got a population of about 23 million. Per capita GDP is about 22,000 US dollars. So that's a developed market level of per capita GDP. And the market cap of the overall market is about 1 trillion US dollars. That's about 200% of GDP, which is a pretty high number, but that's often the case when you have relatively small countries having big markets. And what we can see is that the number of listed companies is about 1,867. So now let's see what's happening from consensus. This is a table of consensus expectations. And we can see relatively low PE versus other Asian markets. 2017 is about 13.9, so about 14 times PE. Now, earnings growth has been poor. You can see it actually was negative in 2015, negative in 2016, and now analysts are expecting a bounce back. But of course, we know that analysts are oftentimes over-optimistic. So maybe instead of 11%, what will actually happen in 2017 is maybe 5 or 6%, but that's not bad compared to the negative in the last couple of years. Now, Taiwan has the highest dividend yield. Oh my goodness, look at that. About 4% in 2017. So even if you only get let's say a 5% increase in the share price in 2017, you're going to get a 4% dividend yield on average, and that means a 9% return. That ain't bad. Now, let's continue on and look at my Stotz 4 elements, which I rank the Taiwan on relative to other countries in Asia. So there's 4 factors to this: fundamentals, valuation, momentum, and risk, and that gives an overall score. And what we can see is that the overall score is moderate. It comes in at about a 4, which is slightly below average as far as attractiveness. Fundamentals, well, moderate due to relatively strong ROE, so it's slightly above average on fundamentals. Valuation, well, its super attractive dividend yield makes this country one of the cheapest in Asia on valuation. Momentum, well, below average earnings growth and poor price performance. We can see what's happened in the past in this area. But if the country can generate a little bit of earnings growth in 2017, then we could see that momentum is turning around. And finally, the risk, well, relatively high beta compared to Asia ex-Japan. So if Asia is going down, Taiwan's going to go down a lot. Of course, if Asia is going up, Taiwan should go up a lot. And finally, let's look at sector price performance here, and that's the bottom right. And what we can see, first of all, let's just understand that the infotech sector accounts for almost 50% of the market. That's huge. Financials, 13%, materials, 10%. So we can see that infotech in the chart was up about 8%, hence the market did very well. Consumer staples were the best performing, and we can see that the consumer staples was up 10%. Chilern Pokpan Enterprise Taiwan, which is actually originally a Thai business, listed in Taiwan, one component of it, and that was up 30%. And the worst one was healthcare, which was down 9%. OBI Pharma was down 26%. So there you get a wrap on what's going on in Taiwan and how I look at it. You can get access to additional research and articles by joining our free newsletter at becomeabetterinvestor.net/join. And you know what? I'm going to see you there. Have a great day.